The stock market just lost 10%, and the people who warned us? They're now the loudest voices in the room. After 2 years of massive gains in tech and AI stocks, it's starting to look like the music stopped. But one legendary hedge fund manager isn't panicking, he's not backing away, he's going all in. In this video, we're diving deep into what Steve Cohen is doing with his portfolio right now, and what it could mean for your investments. Let's talk about the state of the market, the 3 stocks Cohen is betting billions on, and how you can make sense of this chaos. To understand what's happening now, we need to look at the big picture. The economy is being hit by a triple threat: tariffs. These are taxes on imports. When governments impose tariffs, they raise costs for businesses and consumers. And right now, the new U.S. administration is going all in on tariffs, which is shaking up global supply chains, slowing immigration. The labor market isn't growing as fast. With fewer new workers entering the economy, growth slows, productivity drops, and wages get pushed upward, leading to stickier inflation. Austerity. The government is cutting back. After years of stimulus and spending, the tap is drying up. That means less money flowing into the economy from public programs and more pressure on businesses and consumers. Put those together, and what do you get? A brewing storm slowing growth, stubborn inflation, and rising uncertainty. Even longtime optimists are turning cautious, including Steve Cohen. If you're not familiar with Steve Cohen, he's a billionaire hedge fund manager, owner of the New York Mets, and founder of Point72 Asset Management. Cohen isn't your average investor. He's known for making bold bets and winning. His firm manages over $30 billion in assets, and when he moves, Wall Street pays attention. In a rare public interview earlier this year, Cohen laid out his concerns. Tariffs are slowing the economy down. Labor shortages will hold back future growth. Government austerity could make things worse. But here's the interesting part. He's not sitting on the sidelines. He's making some of the biggest moves of his career. So what is Cohen buying right now? His latest 13F filing shows 3 major positions, each of them in companies shaping the future of AI, cloud, and digital infrastructure. Let's break them down. Even in this shaky market, Cohen just bought 4.18 million shares of Amazon, worth nearly $918 million. Why Amazon? Because it's not just an online store. Amazon is a tech infrastructure giant. AWS, or Amazon Web Services, is one of the most important pieces of the internet. It powers Netflix, OpenAI, Meta, government contracts, you name it. It's growing fast, over $120 billion a year in revenue, with 37% margins. That's insane. Amazon's Prime ecosystem is evolving into a utility. Over 200 million people pay monthly for access to faster shipping, content, and deals. The ad business is the secret weapon, growing 20% per year and now worth more than Walmart's entire ad operation. Cohen thinks Amazon is undervalued, even at a $2 trillion valuation. Right now, the market is so focused on short-term risk that it's ignoring long-term dominance. That's the kind of opportunity investors like Cohen look for. Cohen also increased his stake in Microsoft by 357%, now holding 1.67 million shares worth over $713 million. Microsoft isn't just the Windows company anymore. Its cloud platform Azure is neck and neck with AWS. Its new AI assistant Copilot is being integrated across all Microsoft Office apps. Word, Excel, Outlook, Teams. Big clients are already adopting it. Barclays, Novartis, Pearson, and more. Usage is skyrocketing, more than doubled in just 1 quarter. And here's the kicker. Microsoft is also working on quantum computing. Their Majorana 1 chip is being designed to handle 1 million qubits, which could unlock the next era of computing. If that works, Microsoft won't just be part of the AI story. It could lead the next trillion-dollar wave in tech. After its recent dip, Microsoft stock now offers a 6.3% owner's yield, making it one of the best low-risk, high-upside bets in the market. Finally, we've got Nvidia. Cohen already owned a big chunk, but he just added another 500,000 shares, pushing his total position to over $562 million. A lot of people think Nvidia's growth might be done. It's not. It's the backbone of the AI boom. Its data center revenue has doubled year over year. Profit margins, a wild 55.85%, nearly unheard of in tech. Nvidia is doing what Microsoft did with Windows, building an ecosystem that's nearly impossible to leave. The CUDA platform, the Omniverse for digital twins and simulation, AI enterprise software, and now DGX Cloud, an AI as a service model that lets companies rent power, not just buy chips. Nvidia is even moving into AI-powered robotics. Even with regulatory risks and export limits, demand from the US, Europe, and the Middle East is through the roof. Their internal models project an average price of $287, with a bullish case hitting $620. Cohen clearly thinks the rally isn't over. This isn't investment advice, but it is a signal. When the market is shaky, most investors freeze up, but smart money gets active. They're not buying meme stocks. They're doubling down on dominant, cash-generating companies with real-world utility and long-term upside. And that's exactly what Cohen's doing. Amazon digital infrastructure, Microsoft AI plus productivity plus quantum, Nvidia the brains behind the AI era. So now you know what Steve Cohen is betting on and why it matters. If you got value from this breakdown, do me a favor. Like the video to help it reach more people. Drop a comment with your thoughts or questions. We read them all, and subscribe to the channel so you don't miss the next deep dive on market moves, AI trends, and next-gen investing. We're dropping new videos every week to keep you ahead of the curve. Thanks for watching, and I'll see you in the next one.